Nifty. Pradip Hotchandani is now joining us. Pradip, good afternoon. A view on Nifty, a 50-point decline today. Is that has that surprised you?
Not really, Pankaj. Good afternoon, first of all. If you remember when the big rally was getting materialized, 75.40 to 83.36, we were of the opinion that this is just a pullback rally and Nifty has to at least retest previous bottom of 75.40 and most probably it might get even break even break that to make a durable bottom. So that's what we saw in the early part of December. 75.50 was the bottom that was made. So almost Nifty has made a double bottom kind of thing. Now, if you take the weekly closing, the weekly close which we saw in early part of December was on even lower than the weekly close we saw in September. So in that sense, on closing basis, Nifty has even made a lower bottom. So I think major downside targets have been achieved, but that doesn't mean that Nifty has regained the uptrend. You know, every minor rally has been getting resistance at lower, short-term resistance moving averages. In last rally, which we saw from bottom of November to early part of December, that rally was resisted at 34 DMA. That was at that time around 79.80. This time 34 DMA was placed at 78.50, and exactly from there Nifty has been reversed. So I think these rallies are getting resisted at short-term moving averages. This which still shows that market in short-term as well as medium-term continues to be in the downtrend. So basically, my overall view is that this is the final phase of correction or bottoming out formation in which Nifty will consolidate, and for Bank Nifty I think the same 34 DMA was placed around 16,950. So these are the important short-term levels: 16,950 for Bank Nifty and 7850 for Nifty, which are short-term moving averages. If these are taken out, then only we can talk about higher levels which were tested in early part of December. With these stop losses, 16,950 in Bank Nifty and 7850 in Nifty, one can even initiate short sell positions also for targets of the bottoms made in a couple of days back.
Right. What would be your view as far as PNB is concerned? Continuously seeing selling pressure?
Clearly so. PSU banking space is where we have clearly maintained our negative bias, and PNB continues to be weaker among the lot. With today's move, it has even broken the bottom made in September. So I think clearly the bias continues to be negative, and next meaningful support which I can see is 107, 108 kind of level. So clearly PNB will be a short sell from my perspective. One can initiate fresh shorts with stop loss of around 124.
What would be your view on Sun Pharma? Bad news came in, the stock went down about 8-10%, but from that level it is also up 5%.
I think Sun Pharma and Dr. Reddy, both the counters are kind of taking support at their 34-month moving averages, which happen to be a crucial support from a longer term perspective. But both these counters have broken down on their weekly charts, and it is just a matter of time before they breach these levels. So from investor perspective, these levels will be very crucial: 700, 710 for Sun Pharma. And similarly, if you talk about Dr. Reddy, 2900, 2930, this region is very important support for both these stocks. If these levels are taken out, then I will not be surprised to see another 20% kind of fall in both these counters. So we are advising our clients to switch from Sun Pharma and Dr. Reddy to Biocon, which we feel is on the cusp of a breakout. And once 490 is taken out, Biocon is set for a bigger up move.
Right. Don't you think that the downside that you're talking about has to be backed by some news flow as well? For a Sun Pharma to fall 20%, you really need some negative news flow coming in.
Pankaj, I could not hear your question, but I think Sun Pharma has to be looked at from the perspective that most of the frontline pharma counters have seen given stupendous return. If you see the overall chart, 2009 Sun Pharma was just 99 rupees, and from there it went all the way to 1200. So I think most of the positives are priced in, and these counters are not ready for incremental negative news. And every time some incremental negative news comes, you see delivery based selling. So I think most of the positives are priced in. That's what the charts are telling, and these counters are not ready for any incremental incremental negative news. So I think if any incremental news comes, that will be very detrimental for these blue chip counters, and these counters on the back of delivery based selling can easily fall 15-20% more.
Right. Last time when we spoke about Reliance Communication, you said that 84, 85, a close above that will only make you positive further. It's now closing in close to 86 levels. You think that's enough for the name to go back to 100, 105, if I'm not wrong, the target price that you shared with us?
Yeah. It has got a minor resistance around 86, 87 kind of region, which happens to be its 20-month moving average, and that's why we have seen some sort of consolidation around that level. But overall chart pattern continues to be bullish, and as I mentioned and as you rightly recalled, I think 100 is the kind of upside target which I continue to maintain on RCOM. Yes.
Some of the other ADHE names, are they also continuously seeing strong patterns every time that we are talking?
Yeah, but I mean, talking about Reliance Infra, it has, while it continues to be positive, it has got a significant resistance around its 34-month average, which is placed around 462. So I think that needs to be taken out, and I think it's a matter of time before it's taken out. Then it can further move higher, but that continues to be an important resistance to watch out. Talking about Reliance Capital, that has already taken out its 34-month moving average. So I think if we compare Reliance Infra and Reliance Capital, I think Reliance Capital has a better chance to move higher. Here I would continue to hold the stock with stop loss of 200 DMA, which happens to be around 384.
Right. Pradip, just stay on with us, about 2 minutes and slightly more remaining for closing. 50 points decline for Nifty so far. Unlikely to see a material change in the next 2 minutes. Dow futures have also declined as they were trading, and maybe that's the reason why Indian markets fell. Reliance Industrial Infra, 20% decline. Prakash Industries, 8% down. Alembic Limited is up about 8%. ENIL, 7.5% higher. Nalco down 7%. Not sure if there is any news flow, but or maybe even news flow on the aluminium side. Berger Paints, 5.8% higher. GSPL up 5.3%. Magma Fincorp up 5.5%. JM Financial, not that great in terms of volumes, but up 5.5%. Corporation Bank up 4.5%. All Cargo Logistics up 4.3%. Dhanlaxmi Bank down 5%. Marico down close to 5%. Oswal Chemicals up 4% or so. Uttam Galva 4% higher. SREI Infra 5% higher, 45.6. HDIL up 4%. It was a stocks in news. Arvind Limited 4% higher. Gujarat Alkalis 3.7% higher. Phoenix Mills up about 3%. Sonata Software down 3.7%. India Cements was down 3%. Gammon Infra was down 2.5%. Keval Kiran 3.5%. HEG Limited up about 3.5%. If you look at some of the other names, Godrej Properties was up 3.5%. KNR Construction up about 3.5%. Marksans Pharma down close to 3%. KSK Energy up about 3% or so. Sri Renuka Sugar Stocks sweet spot 3% higher. DCB Bank close to 3% higher. Lakshmi Vilas Bank was one of the big gainers yesterday. Today down about 2%. Noida Toll up about 2%. Bajaj Holding was down close to 3%. Gati was down 3%. All Cargo there was up 3%. So logistics stocks really moving in a different direction. Wheels India up 4%. BF Utilities up 2%. OBC and the entire PSU banking space was not looking that good. OBC is down 3%. Some of the other names were also not doing that well. Treehouse is now settling around the 200, 205 mark. City Cables is up around 3%. La Opala RG up down actually 2.6%. RCOM stocks in news 2.6% higher, off the day's low as well as significantly off the day's high as well. Eros Media 2.6% higher. We spoke to the management about the release of Bajirao Mastani and the collections over there. Hindustan Zinc down 3%. Bombay Dyeing up 2.5%. Opto Circuits, Oriental Cement, Parshanat Developers, Jain Irrigation are some of the other losers. HFCL also down 2%. Closing bell on your screen, 45 points down for Nifty, 136 for Sensex. These are provisional numbers, but there should not be a material change when the markets actually adjust as well. Let's start to look at the Nifty movers. So let's start with the top losers. M&M down about 2%, 1253 for Mahindra and Mahindra. That was among the top losers, but was gaining for the last few days. IndusInd Bank down 1.6, 933. ITC down 1.8, 320 rupees. Hindalco 1.7% decline. Infosys down 1.6. PNB down about 1.6 odd percent as well. 120 for PNB towards close. TCS from the technology pack. The entire technology pack was actually weak since morning. Adani Ports down 1.5, Bank of Baroda down about 1.5, Bosch down 1.3, Kotak Bank, L&T, Z Entertainment, BHEL were some of the other noticeable losers, down close to about 1 to about 0.8 odd percent. Some gainers, Sun Pharma was the top gainer, 1.3% higher. It was the top loser yesterday. Idea down about up about 1%. Asian Paints down up about 1. Axis Bank, BPCL, GAIL India were all gainers to the tune of about 0.8%. Some of the broader market names. So Interglobe Aviation did very, very well. It's a new listing and has been doing well. That's a name which did very well. Interglobe Aviation, or the owner of Indigo Airlines. Two names, Reliance Industrial Infra as well as Jaicorp, up 13%. Both are a part of Mukesh Ambani Group companies. Prakash Industries was up 8.5%. ENIL, that's the owner of 98.3 FM, was up 7%. JBF Industries, there was some news flow over there of promoter allotment. The name was up 7%. Berger Paints, 6% higher. Continuously gains coming in for Berger Paints. It's a big beneficiary of crude, maybe some other news also coming in over there. All Cargo Logistics from the logistics pack was up 6. Uttam Galva was up close to about 4 odd percent. Arvind Limited, a very famous name, up about 4%. HDIL was up 3.5%. HEG, Apollo, Opto Circuits, Keval Kiran Clothing, Godrej Properties were some of the other gainers. We were talking to Pradeep. He's still with us. Pradeep, we spoke about the ADAG pack. Can you just tell us what's happening in Berger Paints India? It's not a F&O name, but off late it has done very, very well.
Clearly this paint sector is clearly doing well. Apart from Berger, Asian Paint is looking remarkably strong. I think Berger, particularly if you see its weekly chart, it has been in a consolidation phase since January 2015. In January, it made a high of 252, and almost after a consolidation of a year, it has broken out on its weekly charts. So I would not be surprised to see higher levels. I think the kind of consolidation it has seen, it can easily give 25 to 30% return even from these levels. So clearly, it will be in my buy list.
Right, but because it's a very not so frequently traded counter, one should use for declines or a bad day in the market to buy these names?
Clearly so, and especially keeping in mind that the stock has already in past 5 sessions, it has risen from 214 to 252. Definitely it would be a case for accumulation, but definitely from investment perspective, one should definitely get into the counter.
Right. How would you look at Asian Paints? Probably the largest among the pack over there. Can one, say similar things about Asian Paints? Big returns can be expected even from here on?
I think the kind of consolidation which I talked about, Berger Paint, here that kind of consolidation is definitely not there, because Asian Paint made a high of its all-time high it made in August of 2015. So Berger Paint is like a dream chart where a blue chip counter has consolidated for around a year. But Asian Paint, definitely it has shown a trendline breakout on its daily charts recently, and it's set to move higher. But kind of return Berger Paint gave, I think it will be much more than Asian Paints over next 8-10 months. So clearly, if I have to pick and choose among both these stocks, Berger Paint will be the clear preference.
Right. Adani Ports from the large cap pack, is it in a very big range of 240 to 265?
If you remember, in a couple of months back when you asked me about this stock, I had said that 288 is crucial support, and once this is taken out, then 230, 235 will be the next major downside target. So the counter has achieved those targets. It made a low of around 238 a couple of months back. So I think this will be the major support for Adani Port. It happens to be lower band of monthly Bollinger, which is a very major support from longer term perspective. So I think the stock would consolidate around these levels, but from investment perspective, from investors viewpoint, 230 to 40 range will be crucial, very crucial. And one can, if the trend holds, longer term trend holds true, then this will be a very important levels to accumulate the stock.
Right, but do you think it's seen one of the worst declines that it already had to see?
I think the sense I am getting that it can retest the bottoms it made earlier in the month. Currently, what it has seen is just a pullback rally from the oversold territory, but it has got resisted around its 34 DMA, and overall chart patterns are still not showing that the worst is over. So I think it is a case of I mean, for a durable bottom, one needs to see retest of the bottoms it made in earlier in the month. So I think I would be watching out for retesting of 240 kind of levels in coming days.
Right. What would you make of DLF in the range of 100 to 120? That's precisely the range that it's going to be in.
Yeah, that's what it seems like. I mean, it's not showing signs of crash down, because 100 closer to 95, 100 seems to be its very major support area, and on the higher side 140, 150 is the major supply area. So that is the broad range in which it's trading. So clearly, I mean, it's a kind of I would say it's a kind of avoid for me. If I have to take and pick real estate stock, Godrej Properties, Brigade, even Nesco for that matter, these three are our preferred picks in real estate pick. Rest of the stocks I would avoid at this juncture.
Right. If we would look at some of the names like Infosys, TCS, they have seen structural downturns happening, or slow and steady decline. That is always more scary than an impulse reaction, because in an impulse reaction you tend to recover also on the faster side. You think there is some genuine selling going on over there, which probably could be related to business and the concerns over there in the IT pack?
Clearly so. I mean, you can compare CNX IT or IT index with the pharma index. These are the stocks which have given returns equivalent to that we have seen in pharma stocks. Talking about TCS, it has got a very crucial support on its monthly charts around 20 to 70. So that would be the very important level from investment or long-term perspective. If that is taken out, then I would not be surprised to see prolonged period of weakness over there. Talking about HCL Tech, we have a couple of times mentioned 830 region being very important support for HCL Tech. So I would clearly watch out for that as a very crucial support. If 830 region is decisively broken, then HCL Tech will also slip into negative territory on a larger scale perspective. So clearly these two stocks will be on my radar and these level will be crucial. Infosys is looking a bit better because it is holding on to its 20-month moving average. So if I have to choose one stock from frontline IT, Infosys will be one, but my preference in software pack will be clearly on the mid-cap IT side.
Right, but the large cap IT, which constitutes significant to the CNX IT, is a clear avoid?
It's a clear avoid. I mean, at the best, it's from investors who are holding it for a couple of years. They can hold with these support levels which I mentioned, but I don't see any reason to get into IT afresh.
Right. When we spoke about Bharat Forge earlier, you essentially told us that, it can test the previous lows. It did go down quite significantly to about 780, 790 levels. Now it has come back strongly to about 866. You think again it will retest those levels, or now probably things are looking better?
Things are looking better because after a long time it has managed to close above its 34 DMA, and this despite a weak market. So I think, and if you see monthly charts, it has formed a hammer kind of formation, and after a couple of months weakness, it is turning out to be a positive month for Bharat Forge. Of course, the month is not over yet, but the kind of formation it's showing, I think the things are looking better for Bharat Forge.
Right. Some of the other names like Glenmark, again, we've seen a strong bounce coming in from the lows. Are these names better placed versus, some of the names that we spoke about earlier where you expect selling pressure?
Yes, clearly, mid-cap pharma is better placed and Glenmark is one of them. I think stock is still maintaining its crucial levels on its weekly and monthly charts. Glenmark particularly, if you see 835 is the level which is crucial support. Unless that is taken out, I would continue to have positive view on Glenmark from investment perspective. But Biocon, JB Chemical, these are the mid-cap counters where we are more bullish.
Pradip, any view on crude oil prices? $35, $36, clearly all the bulls were expecting $40 to hold on. but now that it has been taken off, what should be the targets on downside?
I think I can talk about Imax route. That's what the chart of which I studied yesterday only. I think 33 is the level where bottom was made in 2008. So I think 2008 2009. So I think 33 is the level which I would watch out on the Imax route. I think it's clearly oversold, and I would not be surprised to see a consolidation phase around these levels before it resumes its downtrend. But clearly 33 on Imax is very important support.
Right, Pradeep, thank you so much for taking out time for us. Always a pleasure talking.